Alright, so good day. Trust you are doing well today. So today we'll be looking at market structure. Yes, market structure. So what does market structure do for us in the market? So number one, market structure helps gives us a clear defined bias. And number two, it helps us identify momentum. Yeah, it helps us, speculate when there's momentum in the market. Yeah, so we'll be looking at market structure. Alright, so basically have three types of market structure, three basic types of market structure, which we have the bullish market, or the bullish or the uptrend, we have the downtrend, we have the sideways market, we can call it the accumulation or the ranging market, you know. Yeah. So what are the characteristics of each of these structures? First, in a bullish structure, we have higher highs and higher lows. Okay, so we can annotate this first as a low. So from this low, what do we have? We have a high. So this is a high. Is a high. So now this is what? This is a higher low. This was the low we're making reference to, but now this is a higher low. A high, a higher low, a high, a higher low, a high. You get the point. So now this is an uptrend, or we can call it bullish order flow. We can call it bullish market, as the case may be, depending on which way you want to call it. So now take note of this. This is now a significant level, a kind of key level. So now when we get a good momentum, a good breakout with body break, not weak source. So when we get a body break from this zone, we call it what? We call it BOS. What is BOS? Break of structure. Yeah. So BOS is break of structure. And as well, after a break of structure, we normally expect a pullback. You can call it pullback, you can call it retracement, you can call it retest, depending on the trading concept you are using to analyze your market. Yeah. So what is this again? This is a break of structure, and you can see this low. So now what are the characteristics of this uptrend? We have higher highs and higher lows, higher highs and higher lows. So this can even form a channel. We call it uptrend. You can form a channel according to support and resistance, and which in a channel, this is the resistance and this is the support, but we are not talking about support and resistance now. So the next flow is the bearish order flow, or the downtrend, or the bearish market. So the bearish market, it has its own characteristics as well. It has first a high. That means first you need to spot a high, and then you need to spot a lower low. You get the point. So a high first, a lower low. Then what to validate this market? You need to see a lower high. That means this high is failing to break out from this high. You get the point. Yes. So this is a lower high, and then we get a break of structure. Note, this is a break of structure. Why? Because this candle is having momentum to break this structure, to break this leg. So this is a break of structure. So now what do we get again? We wait for a pullback or a retracement, continuation, break of structure. We wait for a pullback, then break of structure. Yes. So now we have bullish market, bearish market. So bearish market, we have lower lows and lower highs. So this is a lower low, lower low, lower low, lower low, and this is a lower high, lower high, lower high. This is the high here now. So you see, this is the low, this is a high. So bullish market first of all start with a low, bearish market first of all start with a high. So what we are doing, we are trying to buy low and sell high. Yes. So the next other concept we'll be looking at is market structure shift. So take note of break of structure. This is break of structure, break of structure, break of structure. So now what is market structure shift? Market structure shift is the change in the delivery of the market structure. So now in this flow, market was forming higher highs and higher lows, but then what you see now, you see a break of structure. But this break of structure now is to the downside, invalidating the trend that was ongoing already. So this is a break of structure. It broke out from this trend. So now what do we call this? Instead of calling this break of structure, we call this either market structure shift, MSS, market structure shift, or we call it change of character. So change of character, the short form can be CHOCH, change of character, market structure shift. So you see, this indicate the start of a new trend or a new structure. So now when you say market structure shift, it is good for you to identify two things. You identify the overall trend of the market, because if you maybe you are doing this analysis in the 15 minutes time frame, the 15 minutes time frame is not superior to that of the 1 hour and the 4 hours. So in the 15 minutes time frame, break of market structure shift can be a retracement in the higher time frame. You get the point. So now it is good for you to be specific with the time frames and also with the breakout candles. Yeah, so now this is a market structure shift. After market structure shift, what are we expecting? We're expecting a pullback and then a continuation of this trend. So market structure shift, a pullback, continuation of this trend. So it is same now for here. Market has been trending downward. What are we waiting for? MSS, which is what? Market structure shift. After this MSS, pullback, and then we are ready to buying into any of these targeted areas. Yeah. So the next one is a ranging or a consolidating market. You can call this ranging market because it is ranging in this range. Obviously it's ranging in this range. Yes, it's ranging in this range. So you can see it like this. Or maybe you are buying from a resistance, because this now is a resistance. You see, it's a resistance because it has held price. It has held price severally. So first, second, third, fourth, fifth. So this is a ranging market or a kind of consolidation market. So you can see here, you can see this one is, they are just clean, they are just neat, but most times it will not be like this. Most times the legs will not just be like this, but it's just an idea, a system that you can apply. Yeah. So as well, here is the same. So either you get the structure like this or you get it haphazard like this. Most times traders call this a seek and destroy, because okay, you might think that okay, maybe this is a break or an internal break of structure in the lower time frame. Then you know that okay, this is a good momentum to buy, but then okay, break, you're waiting for the test, and then boom, maybe market just come and hit your SL. Then you're seeing this as a breakout to sell. You are selling now, yeah, boom, market come and hit your SL. So at this point, you don't trade the consolidating market, you don't trade an accumulating market. Rather, what do you do? If you to partake in this kind of market, you wait for, okay, or you can apply the ICT AMD rule. So what is the AMD rule? Accumulation, manipulation, and distribution. So now we can call this accumulation, or we call this accumulation. So what are we waiting for? So now looking at this, we can wait for a manipulation. So we can term this as an accumulation, then wait for a manipulation. Where can we spot the manipulation now? So this is the manipulation. This can be the manipulation. Manipulate high all these lows, because the market is a mechanical system seeking liquidity or moving from one liquidity to the other. So after manipulating this low, then you can now take your distribution down to your target area. You get the point here. So accumulation, manipulation, distribution to join the flow. So this is how you trade a ranging market. And as well, from this again, so you can call this a channel. So people call this a rectangle channel. So what are you doing here? First, you want to see a rate, you want to see a rate of liquidity or a sweep of liquidity or a manipulation, and that is this. So if you see this, it will add good confirmation to your trading. Then what is this now? A breakout from this range. Yes, a good breakout from this range. So now breakout. So there are two types of retesting. Market can just retest this key level, or then retest maybe a demand zone somewhere inside, then maybe before you start buying. So you see, these are the two ways for you to trade. You not just come here and say okay, you want to sell, or maybe here you want to buy because of this break of structure. You get burned severally. So you just simply wait in a consolidating on a ranging market. But now you can see clearly that in a bullish market, after a break of structure, you can wait for a retest and try to get a confirmation to buy to maybe the next high, or to somewhere higher. And as well, in the bearish market, the same. After a break of structure, wait for confirmation to sell to a low or anywhere of your targeted interest. Yeah. So let's look at this in the chart. Yeah, let's look at this in the chart. All right. So let's examine this flow. Let's examine this flow. So now we are not talking on liquidity. Now we have gone ahead to explain this because this is liquidity. Now this is equal lows. So there's liquidity resting below here, but I'm not talking about this now. All right. So first of all, we can identify this trend by applying this our system, or applying the system of market structure, higher highs and higher lows, or lower highs and lower lows. So we start from here now. What are we seeing? We're seeing that okay, overall we are in a bullish market. Market has been trending upward. So now from here, okay, let's say, okay, for a bullish market, what are we identifying first? We're identifying a low. So I can come and put this first of all. Okay, I can put text. We identifying a low. So low, identifying a low. And again, for a bearish market, we are want to first of all identify a high. Get the point here. So for a bullish market, we identifying a low. For a bearish market, we are identifying a high. So let's go back to our work. All right. So what are we identifying here first? We are identifying a low. So let's call this our low. So we call this our low. So if this is our low, so what are we waiting for? We're waiting for a break of structure. No, yes, a break of structure. So we can see this. This is a break of structure. Yeah, a break of structure from this zone, and this as well is also a break of structure from this zone. So now break of structure. So now we have a low, a break of structure. So this is a low. Where is our next higher low? Because this is a bullish market. This is our next higher low. So we can call this higher low. So why is it our higher low? It's because after this break of structure, we have a retracement. This retracement now, this is the lowest leg, and this is a higher low. Why? Because after this, there was a good momentum for market to break the structure, and you see market never came back to this point. So this is our higher low. After this low, first of all, spotted out, we wait for a break of structure. So after this break of structure, this is what now? This is a retracement. Yes, this is a retracement, or we can call this retest. So you can call this retest or retracement or pullback. So after this retracement, what do we get again? We get a good reaction which broke the structure as well. So now breaking the structure, we got another retracement. You can see this, guys, another retracement. And then what do we see again? We saw another confirmation. This is what again? This is another break of structure. So this is break of structure. So now break of structure, a retracement, break of structure. So you get this retracement as well. So now this is our higher low. Instead of this being our higher low, this is our higher low because this was the lowest part. So I'll just simply come and say higher low. So after this, we got this break of structure. This was the next high. Break of structure, retest or retrace. Then this was the next high. Where was it broken? It was broken here. But where was the highest point before the next low was formed? This was the next significant low, right? Yeah. So the next significant low. So we can call all of these break of structure. Okay. Break of structure, break of structure, break of structure. But in this overall trend, we will not call this break of structure, but we will just liken this to market flow in the lower time frame, because now this is our real low. So we can call this liquidities. So this is our real low. So after this low was formed, you can see that this is the lowest point. After this break of structure, this is the lowest point the market came. Here no, here no, but here yes. So after this break of structure, This is what our next higher low. Then break of structure. You get the point? Yes, break of structure. So at this point, what happened here? There was no break of structure here. Why? Because a candle did not close with body break. So rather, we can call this our high. You can see this is the highest point. So I can go ahead and reduce this. So we can call this our high. Yes, our high. So now what do we get? Low, higher low, higher low, higher low. Yes, despite this MSS, this higher low, and then break of structure, and then we have a high, and then there was no break of structure. So now we go back to our overall structure, our overall schematic diagram. Looking at this, you can see we say when we have a flow like this, and the flow is supposed to continue. So here we were supposed to have maybe kind of retracement and then a breakout again as well. But instead of this now, we get a market structure shift. Remember, I say market structure shift is the change in the character of the structure. So either we call it market structure shift or change of character. So this is market structure shift. It broke this structure, but instead of calling it break of structure, now we call it market structure shift. Why? Because it is breaking in reverse mode. Yeah, so this is market structure shift or change of character. So after this break of structure, we wait for a pullback or a retracement, and after this pullback or a retracement, we join the trend, either targeting multiple levels of interest, of targeted interest here. So market structure shift. So as well, this was a high, a break of structure, break of structure, break of structure, and this was a higher, okay, this was a lower high. Yeah, so what happened here? We got the market structure shift, and after a market structure shift, what are we expecting? A pullback, retracement or retest, and then we are expecting that, okay, the market will gain momentum to go higher. All right, so applying this now, this is what now? This is a MSS. This is MSS now. Why? Because we will not call this our MSS, because why? There was no much momentum for market from here to break this high. I don't know if you get the point, guys. So there was no much momentum for market to break here, but instead market start collapsing from here. So in the lower time frame, we can call this market structure shift. You get the point? But now looking at our overall market structure, see there was no breakout here. What do we get? This is the low we can make reference to. So looking at this low now, where do we have a breakout? We got a breakout from this low, and this is what now? This is our market structure shift. Why? Because it's closing with body break. It closed with body break beneath the candle, and the market closed there. So that is indicating that, okay, the sellers are beginning to get interested in this market. All right, so this is the approach to the system. Remember, in the bullish market, we are trying to wait for confirmation to buy to the high or to multiple areas. And as well, in the bearish market, after break, we are trying to sell to multiple areas of interest. So when we get the market structure shift, what are we doing? We're waiting for retracement to sell. So looking at this now, after getting the MSS, what will be our entry model? So we can now use our FIP retracement tool. So the FIP tool is a retracement tool. We use it to mark range, and then we use it to check the premium zone and the discounted zone of price, so we can take advantage of. So putting this, I'll put it at the high, and then I'll take it at this low. So what can you see? You can see that this is 50%. Okay, you can see that this is 50% of this range, this point. So after this breakout, I will not just, okay, because it's a breakout, trying to sell at anywhere. No, I will try to sell at a discounted price, because this is the price that that captures my interest, not a premium price. I would like to sell at a discounted price, because others are trying to sell at that point as well, and there will be much volume trying to sell at that point, rather than just selling at a premium price. Or you can sell anywhere, but um depending on the kind of trade you are targeting. So maybe after this breakout, I can even just maybe wait for me to pull back retracement to this zone key level, and maybe I can sell here. But if I'm selling here, I'll make sure that my SL will be at this high or above this high a little bit. You get the point? Because this is the high of the trend. So if this will be broken, that means I am wrong on this position. That means I'll just say, okay, this is a losing trade, because the market should get here. That means it with body break, or sometimes it can be liquidity sweep, as the case may be. But then I'll just assume that I'm wrong on this position. All right, so with this, I'll be targeting, I might target this low, or maybe target this because of sake of order flow. So target this as order block. I don't normally like targeting the high, of regions. I just like targeting the kind of order block, or the kind of zone. So if you look at this now, this trade is not something that you would like to take, because what is a 1:1. So with this kind of system, you cannot be profitable in the long run, just in case you have maybe a losing streak. You cannot keep up to profitability. So at this case now, at this instant, I will not take this kind of trade. No, I will not take it. So just look at all these positions now, be building up from this setup. So the next one, I'll look at my discount zone. So this is the 50%, this is my discount price. So from this now, so it's a discounted price. I'll be waiting to get confirmation to say, okay, so after getting here, I can use a risk entry. If I use risk entry, so maybe I'll just be here, and then my SL will be above here, and then I'm still targeting maybe these zones. So now you can see that this trade, wow, this trade is giving me a 3.29 arrow. Wow, it sounds good, right? Because maybe if I should risk a $10 on this trade, I'll be making $32.9, and it makes sense, because in the long run, accumulatively, you can compound profit this well. You get, because for every 1% or any certain amount, you'll be making 3% of this. And if you stick to this kind of system, you'll be profitable in the long run. So that is another one. The first one was 1:1. This one now is 1:1 3.2. So let's other refine the trade more. So just in case I'm not using a risk entry, I'm using a kind of confirmation, stuff like that. So maybe from this 50% discount, I'll be waiting for a kind of maybe internal break of structure. So this is the 4 hours. Maybe if I should narrow it down to 30 or 50 minutes, I'll be getting a kind of breakout from this zone. So I can even see that okay, this is a low, and maybe this is a low. Okay, let me just say this one within. So I can just say, okay, this is a low, and maybe this is a breakout. So okay, still selling this market, I'll put my order here and my SL here, and I'll still be targeting this point. And so you can see this is 2:64. This one is even lower than this other one, this risk entry, right? Yeah. So but I can still go to refine it further using what? Using zones. So if you look at this, my FIP 2, I have some percentage, I have some percentage I left activated. So this is 50%, 38%, 0%, then 88, 78. So me normally this is my zone. I would like to buy from anywhere 88 to 73%. Why? Because I see this as a supply zone. Get, because this is a good discounted price. This is where institution and big players that would like to sell the market from. So I'll just wait for market to trade into this zone. And I can use risk entry or confirmation entry as well. So let's just use the first one. Okay, risk entry. Using risk entry at this zone. So I might just put my entry at the middle of this fair value gap. So just come put my entry SL and my entry and my SL just below the high. So I might TP down. Wow, so guys, you can see this is 16 arrow. That means for every 1% of my account I risk, I'll be making 60% of my account. It is so huge, it is so wonderful. I love this kind of trade. Yeah, because if I'm risking $10, I'll be making $163. It's $165, sorry. So now looking at this, let's see. Okay, see, it was hit, the TP was hit. So but this now requires patience, because it took some days for this to be hit. All right, so despite this now, let's use confirmation entry. This you might take several losses if you are using a risk entry more than a confirmation entry. So using a confirmation entry, you have high win rate, but then using a risk entry, you have maybe low win rate but high risk to reward. Yeah, so let's say I use a confirmation entry for this. So first of all, I saw this rejection. This is a pin bar, yeah, it's a pin bar. You can see the pin. It's just like a pin, so it's a pin bar candle. So after this now, I will narrow it down to the, okay, so let me say this. I'll narrow it down. So this is the, let me put this now. This is a high. So now if I want to take this trade out, maybe I can narrow it down to 30 minutes or so and wait for internal break of structure. So why am I waiting for that? To get confirmation that really this market from this zone will be selling. You get the point here. So let's look at that. Let's look at that. All right, so this is the zone. So we're waiting for break of structure at this point. Then you see this high. This is the worst case scenario. So our SL would be above here. So note, this is not gambling. This is not gambling. This is, this is a normal trade. So now, okay, market traded into the zone. So what are we waiting for? We're waiting for break of structure. So what is this? This is a break of structure. This broke this. So we can now enter this. I know I'm very comfortable with this kind of trade. So maybe from here, I can just wait for maybe a retest to this zone, to this key level. Then my SL not above this because sometimes it might get weak, but above this. So above this a little bit. Then and I'll drag my my take profit down so I can go back to my 4 hours which we were using. So let's see the risks. Let's see the arrow we'll be getting for this trade. This is the risk to reward. Right, network. Okay, so a risk entry, like I said, will give you good risk to reward, but then the win rate it will be a little bit lower than using a confirmation entry. Confirmation entry, you take good successful trade. Your trade, you might almost have a 80% win rate because you're always waiting for confirmation. So at this now, this is 6.6 risk to reward. So wow, you see, this makes sense again. So this makes sense. That means for every $10, you'll be making $66.7. And this makes sense. It makes sense. So either you're taking this or you take 16 arrow. So that means you're taking it from points like this. So the trading is about risk to reward. Risk to reward helps you to build your system and also to be profitable on trade. Yes, to be profitable accumulatively. Yeah. So but then we are talking about structure. So now I hope you gain a little insight from this. So let me just recap on the whole process again. This was break of structure, market structure shift indicating a change of market flow. So but we wait for confirmation, then we saw the market to the next point of interest. So as well, now you can see from here now we start getting a bearish market. So what is this now? This is what we can call this now our high, right? Yes, we can call this our high now. So remember, for a bullish market, first we need to see our low. So now for a bearish market, we need to see our high. So we have seen our high. So what are we looking for again? High. The next thing is pre. Okay, the next thing is low. This is what? This is a lower high, lower low, lower high. So the next thing we're looking for a low, then a lower high. So let's look at this now. So this is a low. So this is a lower high. So you can see that the structure is building up. So what are we waiting for? We're waiting for a break of structure. So this is what? Break of structure. But then, after this market structure shift, yes. So now you know that this break of structure is not market structure shift too. You get the point, yeah. So this is break of structure now. So I'll just go and put BOS, break of structure down. So break of structure high. So what am I doing? I'm waiting for retracement. So okay, let's say after this break, of structure, maybe if I want to add another position, I can use my FIB tool the same. Just doing this now. It's my FIB tool. So this is 50%. So that means I might not have gotten another position to add on this. So I'll just let that run in the first position running. So what again? I saw a break of structure here because what? A high, a low, a high, a low, a high. So where's the next low? After this high, okay, 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 I'll delete this. So this was a break of structure, or this was the okay, this was market structure shift, this was a low, and then we call this a break of structure at this point. Then this was a lower high, but then you know we can use this inner flow here. So let's say this is a break of structure, this is a retracement. So this is what, this is the next break of structure. Yeah, this is the next, okay, this is the next lower low. So after this lower low, because we know it has broken structure, you see several structures, so wait for retracement or pullback. So waiting for retracement, we can use our fib tool as well. So from this high to this low, 50%, we define our entry model. So you see here, risk entry 50%, or you're taking your trade from a demand zone and waiting for confirmation. You can do stuff like that, and you traded into our premium, into our discount, sorry, this time. So like that. So this is what lower low, lower high, lower low, lower high. So now this is the characteristics of a bearish market. So you see bullish market, bearish market. So now the last phase of the market, consolidation. So you can see it now at this point. This is what now, this is a consolidating market. So what you see, you just see price ranging at this zone. Yeah, ranging at this zone. So it is important to know that most times when market want to change structure, it goes into a consolidating zone. So this is what we call an indecision, because there is no clear structure. Market is just selling as if it broke structure. It broke structure, now I'm buying. You see, it broke structure, selling, it broke structure, buying. So you can see what I was telling you guys here, that you don't have to trade this kind of market. Rather, you wait for a manipulation, and then if it's going down, you wait for a manipulation up, and then you are selling it down, or wait for a manipulation down and then you are buying it up. Yeah, so at this point now, what do you think we'll be doing? We'll just simply wait. Yeah, we'll just wait, because there's no clear division in this market. So what are we waiting for? We are seeing this structure, we are seeing this highs first. Okay, this can just be lead to confirmation. So we want to see this, want to see a breakout out of this zone, a breakout out of this zone. Despite this line, this trend line, we are not talking about support and resistance yet, so you can despise this. So after this high, what are we waiting for? Want to get a breakout from this zone, and then a retest, retest of any of this. So this now is a good demand zone. So maybe you can break out, retest, but most times it will just retest to the zone, to the key level. When the resistance is broken, it tends to be a support, so you can just retest and go up. To look for a demand zone, retest, and then we can take our TP at multiple levels. This is one of them. This is a fair value gap. This is a supply zone. Me, I would like to take profit around this zone, because this is supply zone. Then if it breaks higher, maybe I can look for other entries up. So we can apply this now to this market. So you see this current market price, this is USD CHF 4 hours. So now we are waiting to get market reaction from this point. Yeah, so this is on market structure. This is on market structure. So we have covered the three phases of the market: the bullish, the bearish, the consolidating market. And then consolidating is a time to wait. Time to wait. We are waiting for manipulation, waiting for break of structure, waiting for confirmation. You get. But then in the bullish market, you can just come in a retracement, look for entries to buy, retracement, look for entries to sell after a breakout or break of structure. Get the point? Yes. So this is market structure. I hope you gain value from this from this lesson today. Do well to drop your reactions, questions on the comment section. Thank you very much.